Hey everyone, welcome back to the Weekly Trade Advantage channel. We're diving into the world of trading, breaking down the key differences between trading stocks and trading options. If you're new to options or just wondering how they compare to stock trading, this video is for you. By the end, you'll understand the unique advantages and challenges each asset type offers, helping you decide which fits your trading goals. Let's get into it. Section 1. Ownership versus contract. So first up, let's talk about ownership versus contracts. When you buy a stock, you're actually purchasing a share of ownership in a company. This ownership can give you a stake in the company's performance, which means you might receive dividends and benefit if the stock price goes up over time. Essentially, when you hold a stock, you own a piece of the company. Options, on the other hand, are contracts, not ownership. An option gives you the right, but not the obligation, to buy or sell a stock at a specific price within a certain time frame. So, you don't own the stock, you just have control over whether you want to trade it at a set price, giving you some flexibility but not the actual ownership perks. Imagine you want to buy 100 shares of NVIDIA, and the current stock price is $145. Buying those shares outright would cost you $14,500, that's $145 per share multiplied by 100 shares. However, if you decide to trade an options contract instead, you could control those same 100 shares with just one options contract. For example, buying one NVIDIA call option contract that expires in a month might cost around $1,000. This means that, instead of paying $14,500 to own the shares, you're paying only $1,000 for the right to buy them within the next month, giving you leverage for a fraction of the capital. Section 2. Time factor. Next, let's cover the time factor, which is a huge difference between stocks and options. Stocks have no expiration date. Once you own a stock, you can hold on to it as long as you want, letting it grow in value over years or even decades. Options, however, come with an expiration date. When this date arrives, your option will either be exercised or expire worthless, depending on whether it's profitable or not. This means that time works against you in options trading, as the value of an option often decreases as it gets closer to expiration, especially if it's out of the money. This time pressure can make options trading a bit more complex. Section 3. Leverage and capital requirements. Let's talk about leverage and capital requirements. When you buy a stock, you're paying the full price of that share. If a stock is trading at $100 a share, you'll need $100 to buy it. Options, however, give you more leverage for a fraction of the cost. By buying an option, you can control a larger amount of stock with less capital. This leverage can amplify your gains if you're right about the price movement, but it also increases your risk. If the option expires worthless, you lose the premium you paid, potentially making options riskier for beginners. Section 4. Risk and reward potential. Now, let's get into risk and reward potential. With stocks, if a company performs well, your stock price goes up, and you make a profit. However, your losses are capped at what you initially invested, as the stock price can't drop below zero. With options, things are a bit different. Options can expire worthless, so you could lose your entire premium, but they also have higher reward potential due to leverage. This means that options allow traders to earn significant profits from correct predictions, but the risk is higher too. Section 5. Profit potential. Moving on to profit potential, stocks can earn you returns through price appreciation and dividends. Your profit potential is directly tied to the stock's performance over time. Options trading, however, allows you to profit from different types of market movements, such as price direction, volatility, or even time decay, depending on your strategy. This flexibility means you can structure trades to profit in multiple ways, not just by hoping a stock goes up or down. Section 6. Complexity and Strategy. When it comes to complexity and strategy, stock trading is more straightforward. You buy a stock, hoping it will go up, or sell it if you think it will go down. Options offer a whole range of strategies, from simple calls and puts to more complex ones like spreads and straddles. These strategies let you profit from various market conditions, but they also add complexity. To trade options well, you'll need to understand factors like volatility, time decay, and even the Greeks, things you don't have to worry about as much in stock trading. Section 7. Dividends and Voting Rights. And finally, let's talk about dividends and voting rights. Stockholders may receive dividends if the company decides to distribute profits, and they often get voting rights in shareholder meetings. With options, you don't get any dividends or voting rights because you're only holding a contract to buy or sell the stock, not the stock itself. Summary. So let's wrap up with a quick summary. Stocks offer direct ownership, are simpler to understand, come with fewer variables, and provide potentially steady long-term growth with lower risk. Options, meanwhile, are more complex and allow a wide range of strategies. They come with higher risk but can also offer higher rewards in the short term due to their leverage. If you're new to trading, it's essential to learn the basics of both. Stocks are a great starting point for many people, while options trading, with its complexity and reward potential, can be explored once you're more comfortable with the market. And remember, understanding the pros and cons of each asset is key to aligning with your goals and risk tolerance. In the next video, we will understand the difference between call versus put options. Outro. Thanks for watching. If you found this breakdown helpful, don't forget to like, subscribe, and hit the bell for more trading tips and strategies. Let me know in the comments which topic you'd like us to cover next. Happy trading, and see you in the next video.